Welcome to Definitive. These are my thoughts on the market, and they are the thoughts and catalysts. So you'll hear the strategic and momentum driven plays that I think will affect the market. This is not intended as investment advice. Thank you. Hi, this is May 11th, and the job reports came out on Friday, which were very low. They were at 266,000 in terms of non-farm payroll. Some of the largest creation, however, which should be a little troubling, was in government. Local government also continued to show increases. But what I think is most troubling is the Biden economy is now first quarter. And while the president spoke last night and gave a report where he said he had created over 1 million jobs and this was just a small blip, the real question comes now in the market of whether or not the job growth will continue. And at 1 million, that was very impressive. However, recall that there were 20 million people who lost jobs. There's still at least 10 million that really need jobs. What's created the impact or the negative effect onto the jobs has been the unemployment benefits that are being paid out to people who are not working. If you have a small child at home and your school is closed, and even if you have an older child at home and your school is closed and you need to supervise that child or make sure that they're in some sort of structured environment, you're really not going to be able to work. So you can't go back to McDonald's. And we've seen companies like McDonald's or others where they're paying people a bonus to sign up and to work for them. Now, this also is occurring in the trucking industry where you're seeing experienced truckers receiving something like $14,000 a week, which is something that was highlighted in the Wall Street Journal. And while you have many economists saying that the U.S. economy is going to grow at, say, 6% or better than 4%, these are also some of the same economists who were able to unmistakably not predict many of the situations that we've had in the past that were right in front of them. And some of these economists have even won Nobel Prizes. That's how well liked they are. However, in terms of their prediction and ability, it's much like their economics. It's based on a lot of theory. And this also comes to what we have in the economy and the markets today is the question on the further deployment of the Biden economy. How much of this will be driven by actual substance? And do we have a substantive program in place to create jobs? Much of what Biden has talked about has been about the future, which is great. We should live for the future. But the problem is that much of the job creation and much of what is going to drive this, it's not clear to many people or to economists or to those who would need a job. If you're going to build a future industry, that's great, but people need jobs today. So we'll see this infrastructure bill coming out. We see that in Congress. The Congress in the United States continues to be an issue where they are not working together. They're not legislating. They are continuing to name call, pick fights, and not really do their job. And they fail to get fired for this, which is amazing. So what happens now? Well, we do see that China, which has been growing fantastically, especially since the 1960s, and you go into the 70s, the 80s, and really, really surged over the last 10 years. China has a position globally throughout the world. Pick any vacation spot, go to the Caribbean, go to Europe. You will see China is in place and has developed and is continuing to develop everything from telecommunications to sea harbor ports, etc. And then if you move into greater detail where you're looking at hospitals, infrastructure, China is there as well. And China has really spread its hands very well across the globe. And what they've done now is they've also launched their digital yuan. And this has become a very strong key point to their drive to replace the US dollar as a global currency. If you already have your infrastructure set up for the economics and your support is there, you will not need the US dollar, and the US dollar will become something of a backseat player probably by 2045 in the eyes of, I think, many of the Chinese. And this is further accelerated by the growth and by the Chinese development economically. They've developed plans where they're helping countries, and even if they're not, and they're then eventually taking over the project, ultimately it becomes Chinese. Just look at what they've done in Sri Lanka, look at what they've done in Africa, and you do see many investments in the US from private equity where they're investing into the infrastructure, but overall, you're still looking at an economic development by China. I'll go into further detail in the regions and the countries in other videos, but this is just an overall view, or general 360 view to start off with. Thank you.